I think that what is out there in terms of bad news has been priced in, Terra, all of the CFI failures, uh, all the hacks that scared people. I think this is priced in. So from that standpoint, I think there's a very good chance we have seen the low for the year, if not some black swan event surprises us. But by definition, we can't know and predict and anticipate black swans. So, but I am hopeful we have seen the bottom now.
In a recent episode of his crypto podcast, Real Vision co-founder and CEO Raoul interviews Antoni Trenchev, the co-founder of cryptocurrency lender NexoCapital and a big advocate for the industry. Both discussed Trenchev's journey into cryptocurrencies, founding NexoCapital and opportunities for investors in the crypto space. Trenchev explains that he got introduced to cryptocurrencies while serving as a member of the National Assembly of the Republic of Bulgaria. According to the former Bulgarian lawmaker, he read Satoshi's white paper in 2013, but couldn't make sense of it at first. When he finally saw the value of the crypto asset, he started dollar cost averaging using 10% of his salary every month. Since then, Trenchev has become a prominent member of the crypto industry with his work on Nexo. He has also increased his cryptocurrency holdings to other cryptocurrencies like Ether. While speaking with Pal, Trenchev discusses the new opportunities investors can take advantage of despite the bear market. He speaks about the Ether, Merge, non-fungible tokens, and the metaverse. According to Trenchev, the market has slowed considerably due to the bear market, but a lot of things are being built in preparation for the next big rally. We will now take you to the interview. Please watch, like, and share this video. Also, ensure you drop your comments and observations below, subscribe to the channel, and turn on post notifications for more videos like this. Thanks and enjoy the video.
The new big change coming, and I've talked a lot about this, is ETH yield, staking yield. It gives us a benchmark yield for the space. How are you guys thinking through that? The opportunities it might create for new products, stuff like this? Because I have a feeling it might change DeFi and CeFi in many ways because of the availability of yield and the kind of security of that yield itself.
Yeah, I'll actually make the case that it already has changed it to a certain extent. There are the three big buckets in crypto right now. We have speculation, which, like it or not, has been a driver for many people into the space. This has dried out on a massive scale. You don't see big time retail money coming in, some institutional here and there, but it has dried up. The second thing, is obviously leverage in the system, the internal leverage in the system that has been flushed almost entirely and de-leveraged since May. And then the third bucket of importance, I think, is exactly what you pointed out, yield generation. Yes, we had the merge and Ethereum, which sort of ideally would even change Warren Buffett's mind that these are non-productive assets because they're not yielding anything. And now we have this sort of inbuilt mechanism, which, was a reason for price appreciation that we saw. And, unfortunately, some people have been selling the news. Disclaimer, I am still long the Ethereum that I have gathered picked up in May, June around 1,300, rolled it all the way up to 2,000, and now I am in the red again, but I have transformed from a short-term speculator around the merge into a long-term believer of Ethereum. Just kidding here. But I think, yield is going to change in a couple of ways. It will give access to a more predictable flow of yield to institution and people that are savvy enough to be doing, staking like activities themselves. It will offer companies such as ours a predictable way of generating the yield for those retailers that are not necessarily in a position to be executing that themselves. But I think the overarching theme, and I'm not mistaken, you have been talking about this on your podcast, is what is happening with yield in the bigger context of what the Fed is doing, and the fact that on a platform such as Aave, we now have 1% of yield versus treasuries, which are, you know this better than me, but I think yielding around 3%, essentially risk-free, versus yes, Aave has been around a number of years and it's one of the better protocols, definitely, and more secure. But like, how do you strike a balance there? And is this sort of dynamics around interest rates and what is happening in treasuries and government bonds overall, that is changing the dynamics, and we yet again find ourselves in a situation where we will have to reinvent the narrative for people to be again drawn into the space after this flush out that we saw and the deterioration of confidence in some of the players.
In addition to getting yield on staking Ether, Trenchev also sees a lot of developments in non-fungible tokens and the metaverse. He explains that though liquidity has slowed down for both sectors, much like the rest of the digital asset space, there are still some opportunities for all categories of investors. Despite the bear market, a lot of money from governments and multinational corporations is going into the metaverse and NFTs. Most recently, the Japanese government announced on Monday that it was looking to invest in metaverse and NFT expansion. During a policy speech, Prime Minister Fumio Kishida said that the country's plans for investing in digital transformation include NFTs and metaverse services. The country is also giving tax incentives to companies that embrace a digital future. While addressing the parliament on Monday, the Prime Minister said Japan intends to focus on supporting the social implementation of digital technology and promote efforts to expand the use of Web3 services that utilize the metaverse and NFTs. Here's another clip from Pal and Trenchev's discussion on the opportunities in both sectors.
But where's next for you guys? Where do you see this market going? Where's the big opportunity? Because as we said, everything's evolving all the time here.
Short and midterm, we are in the process of, making our software infrastructure more robust. Not the most exciting thing to be talking about on podcasts, but it's terribly important, like revisiting the code, making it more scalable. And, this breaks from exuberance and excitement, gives us the opportunity to work on that, where you're not constantly pressured to be delivering new products, to onboard new assets, stuff like this. So a little bit of house cleaning. We are also restructuring some of the products that have come under scrutiny, particularly in the United States. A competitor, for lack of a better term, of ours, BlockFi, they had a settlement with the SEC, which gave clear guidance as to how the Securities and Exchange Commission would like to see yield products, earn interest products be registered and operated in the United States. This is uncharted territory. Nobody has done an S1 registration for a crypto business in the United States. So that takes a lot of time, just restructuring some products that we had rolled out and had to roll back so that we can ensure a compliant and sustainable offering given the new clarity that we have received. So we're working on that. Also not terribly exciting in terms of news. I want to splash something big here and tell you this is what is going to happen in 6 months. But the building that has been done in bear markets, it's not to be underestimated. It is exactly this same mentality that in 2018-19 bear market helped us prepare for what ensued after the response to the COVID-19 pandemic. Had we not done the exact same things that we're doing, we would not have been in a position to
I find
capture
the
that
the space moves so fast that you don't get a chance to catch up with yourself and do the things that you need to do because they're boring and they take a lot of work, building your risk management models out better or your infrastructure and your tech stack and all of that stuff. And the crypto market gives us this time to breathe sometimes. And it's really useful because if not, you know what it's like. You're sleeping 4 hours a day because crypto's on fire, you've got new customers coming, as you said, new products. So I think it's a really healthy, these slowdowns, particularly because there's quite a lot of capital being put in the space from VCs now. So people have liquidity and they're just heads down building learning from the past wave, building for the next opportunity?
Unfortunately, we are in a situation where we like to think of crypto as, sovereign, definitely outside uh, or we were hoping it's outside the realms of and the whims of what the Federal Reserves and the central banks are doing. Turns out it's not. So I personally didn't think that JPA will go, near Volcker in terms of commitment of raising rates. I thought that he and the Fed decisions maker will fold. I was wrong on that. They appear very committed to, continuing to raise interest rates. And in the short term, this is something that will weigh heavy on the markets. I think there's no way around that. We talked about the three influxes of funds and potential rallies that have dried up. Then, but then they don't build up like slowly and you can anticipate them. They go rapidly, and only then do you notice, or most people then notice that something has been changing, and those can change in an instant. I think that we have to recreate and reinvent the narrative around crypto just to get it going. And if the Fed does not intervene in a negative way, I think that, next year it will be much, much better than this one, sticking to our joint promise to not give any price predictions.
So, okay, I am going to pin you down on a probability that the low is in. So let's use ETH, because we both
Okay.
we both think of the world probably in ETH terms quite a lot. Probability that the low is in or not? You kind of 70%, 50%.
70%. I was deliberating whether to say 60 or 70, but let's be bold and say 70.
On Monday, Bitcoin started to make some unexpected recovery and is now back above $20,000 after spending over a week below that important support. As of press time, is exchanging hands at $19,986, a 7.34% increase over the past week. This bear market rally is coming days before the U.S. Bureau of Labor Statistics is expected to drop September's CPI figures. We could continue to see more upside moves until October 13, when the inflation data will indicate the Fed's next move. According to most recent forecasts, the coming inflation data could spike, which would mean more massive interest rate hikes from the Federal Reserve. Do you think the rally will be sustained, or is this just another brief reprieve before the storm hits? Let us know what you think in the comments section below. Also, ensure you leave your comments on Powell and Trenchev's discussion, hit the like button, and subscribe for more videos like this. Thanks for watching.